Welcome back to the Cryptoholics Corner, your hub for all things crypto. Join us as we dive into the world of cryptocurrencies. Stay tuned for enlightening episodes, and remember, fellow cryptonauts, the crypto universe is vast, and together, we'll navigate its depths. Alright, let's talk about Bitcoin and Ethereum. At the present moment, Ethereum is experiencing a bullish divergence pattern, while Bitcoin may be showing signs of a newly emerging bearish divergence pattern. This divergence dynamic has become even more intriguing with recent surges above a critical resistance level, a topic I'll discuss shortly. Please stay with me. Now, to begin our analysis, let's turn our attention to the daily Bitcoin chart. As of my current assessment, Bitcoin's price has recently completed a daily candle closing in the red. This occurred shortly after marking a higher high. Now it seems to me that Bitcoin's price is displaying a peculiar behavior. While it's achieving higher highs in daily candle closes, the Relative Strength Index or RSI on the daily time frame is simultaneously establishing lower highs, which is a classic bearish divergence signal. However, it's essential to note that this solitary red daily candle isn't a definitive confirmation of the bearish divergence. It's more of an initial signal, a hint of what might be on the horizon. To have confidence in the validity of this bearish divergence, we need to see more daily red candles, preferably with closing prices below the 28,000 mark. This would align with the need for a strong RSI reversal, confirming the presence of the divergence. Without the confirmation of those red candles, the price could continue its ascent, potentially pushing the RSI even higher and negating the bearish divergence. It's this uncertainty that emphasizes the need for further validation. If this bearish divergence takes root, it's likely to result in a reduced bullish momentum, potentially leading to choppy sideways trading or even a price pullback. Even if the bearish divergence on the daily time frame materializes, we must acknowledge the recent successful breakout above a significant resistance zone ranging from approximately 27.9k to 28.2k. In the best case scenario for the bullish camp, if the bearish divergence holds, it would result in a modest pullback, possibly revisiting this previous resistance, now acting as potential support. As long as Bitcoin remains above 27.9k, consolidation in this range represents a constructive pause before the next leg of its upward journey. Should we indeed find support at this previous resistance, the following critical resistance levels come into view. First, we have the range between 29.1k and 29.4k. In a more bullish scenario, another hurdle for Bitcoin bulls is between 30.2k and 30.4k. Regarding support on the daily time frame, renewed support could be identified within the 27.9k to 28.2k zone. However, for Bitcoin bears, the less favorable scenario would be a breakdown below 27.9k. This action not only confirms the bearish divergence but also represents a bearish signal on its own. We find ourselves at a critical juncture for Bitcoin's price, one that could significantly impact the next few weeks. In fact, the events of the next few days may predict the coming weeks. Now, if you look at it on a shorter time frame, such as the 6-hour Bitcoin chart, you'll notice a distinct rejection from a significant Fibonacci level around 28.7k, which is currently acting as a strong resistance. In a more bullish narrative, additional resistance levels await Bitcoin on its upward journey. When considering short-term support levels, it's crucial to delve into the intricate world of Fibonacci analysis. First and foremost, we find ourselves at the 38.2% Fibonacci support level, nestled between 27.9k and 28k. However, if we witness a decisive dip beneath this level, the next short-term support lies between the approximate boundaries of 27.3k to 27.4k, with a golden pocket serving as support between 26.6k to 26.7k. As we've discussed in recent days, the 6-hour Bitcoin Relative Strength Index or RSI has ventured into overbought territories, signaling that the price has risen too rapidly. This overbought condition often signals a much-needed cooldown and an RSI reset. This reset can manifest as choppy sideways price action or even a modest short-term pullback. Outcomes like this are commonly expected in the coming hours or days. This is what we anticipate in the short term, a brief pause in the previous bullish momentum. Now, if we turn our attention to the support and resistance landscape from the Bitcoin order books across multiple exchanges, we discover a substantial cluster of buy orders acting as strong support ranging from 27.8k to 27.9k. In terms of resistance, we find a formidable barrier around 28.9k when examining the sell orders. Notably, the Bitcoin liquidation heat map shows a significant concentration of liquidity around 28.1k to 28.2k. So, if we witness a spell of short-term bearish price activity and the bearish divergence materializes on the daily time frame, Bitcoin is likely to gravitate towards this liquidity pool. Liquidity pools often track price movements. Now, let's shift our focus to Ethereum in this comprehensive analysis. We direct our attention to the daily ETH to USD chart. Ethereum's price remains below a significant resistance zone, which is held firm around 1620 to 1660. As we analyze the daily Ethereum price oscillators, the MACD currently signals limited momentum. This suggests that, for now, there isn't a clear and forceful trend on the daily time frame. We seem to be in a phase of sideways oscillations. When we consider the Ethereum RSI on the daily chart, the bullish divergence is still technically in play. This indicates that we can expect either choppy sideways price movements or possibly a bullish rebound on the daily chart. Now, this can occur over the next 1 to 2 weeks from the initial emergence of the bullish divergence. Now, this scenario seems to be unfolding as anticipated and is likely to continue over the coming week as the most probable outcome. Delving deeper into the realm of significant support and resistance on the daily time frame, we find a crucial level of support spanning a price range from 1510 to 1540, serving as a stronghold of support. However, if we witness a confirmed break with daily candle closes below the 1510 mark, the next significant support level awaits us within the golden pocket, and that is roughly situated between 1360 to 1.4k. In terms of resistance, the previous 38.2% Fibonacci support level has now transformed into a formidable barrier hovering around 1640. For those seeking a closer look on the 6-hour time frame, additional short-term support and resistance levels come into view. The resistance level at 1605 remains intact, but in a more optimistic scenario, we should confirm a breakout above 1605. The next short-term resistance tiers come into view at around 1630, with a golden pocket standing as the ultimate hurdle, reigning over the range of 1660 to 1670. In the realm of short-term support, there is a modest lifeline at 1570, and further down the ladder, we find additional support hovering around 1530, give or take. As mentioned earlier, the limited momentum observed on the daily MACD results in a landscape of choppy sideways price action, often an expected outcome following a bullish divergence. Surprisingly, one can still profit substantially amidst such oscillations. And that does it for our video. We thank you for joining us on this exciting journey through the world of cryptocurrencies. We at the Cryptoholics Corner hope you've gained valuable insight and knowledge that will empower you in your crypto endeavors. Don't forget to like this video, subscribe to our channel, and click the notification bell to stay updated with the latest trends, news, and tips. And until next time, keep exploring, keep learning, and keep prospering in the fascinating realm of cryptocurrencies.